Audits are an inevitable part of running a business, whether you're a startup, a small business, or a large enterprise. While the word audit often sparks stress, being audit-ready doesn't have to be painful. Preparing for an audit ahead of time shows that your business is organized, trustworthy, and financially sound. More importantly, it can save you time, money, and potential legal trouble down the road. Whether the audit is internal, external, or regulatory, being audit-ready means your financial records and internal processes are well organized, accurate, and transparent. In this video, we'll explore the top 10 ways to make your business audit-ready, so you can face any financial review with confidence. 1. Maintain accurate financial records. Why it matters. Audits focus heavily on your financial documentation. Sloppy or inconsistent records can raise red flags and slow down the entire process. What to do? Keep all your financial data well organized. This includes invoices, receipts, bank statements, payroll records, loan agreements, and expense reports. Use accounting software like QuickBooks, Xero, or Wave to record every transaction. Review your books regularly for accuracy, and reconcile your bank accounts at least monthly. Tip: always back up your data digitally and organize your files in folders labeled by fiscal year and category. 2. Separate personal and business finances. Why it matters. Blurring personal and business finances is one of the most common mistakes small business owners make. It complicates your books and makes audits more challenging. What to do? Set up a dedicated business bank account and credit card. Avoid mixing transactions. Pay yourself a salary instead of using your business funds for personal expenses. Tip: use accounting tools that allow you to tag and categorize each transaction for easier tracking and separation. 3. Create a strong internal control system. Why it matters. Internal controls help prevent fraud and ensure compliance with laws and regulations. Auditors check whether your business has systems in place to detect and prevent errors or misuse of funds. What to do? Set up checks and balances within your accounting system. Assign different people to handle receiving payments, recording transactions, and reconciling accounts. Limit access to financial systems based on employee roles. Tip: implement approval workflows for large expenses, reimbursements, and vendor payments to reduce errors and misuse. 4. Keep tax documents organized. Why it matters. Taxes are a key area of any audit. If your tax filings are incorrect or inconsistent, it could lead to penalties, audits by the IRS, or loss of investor confidence. What to do? Store copies of all tax returns, W-2s, 1099s, and supporting documentation. Maintain digital and physical records for at least 7 years. Keep documentation of tax deductions, credits, and any correspondence with tax agencies. Tip: use tax preparation software or hire a tax professional to stay current with local, state, and federal requirements. 5. Automate where possible. Why it matters. Manual processes can lead to errors and inconsistencies, making audits more time-consuming and error-prone. What to do? Use accounting software that automates data entry, reconciliations, and report generation. Automation reduces the risk of human error and ensures consistency. Tip: tools like FreshBooks, Zoho Books, and Gusto, for payroll, can automate key financial functions and provide audit trails for every transaction. 6. Conduct regular internal audits. Why it matters. Waiting for an external audit to discover discrepancies can be risky. Internal audits help you catch issues early and demonstrate proactive management. What to do? Schedule regular internal audits, quarterly or biannually. Review your financial statements, examine internal controls, and ensure compliance with accounting standards. Tip: create a checklist of audit essentials and involve different departments to provide a comprehensive overview. 7. Prepare and review financial statements regularly. Why it matters. Clean, up-to-date financial statements, like balance sheets, income statements, and cash flow statements, are essential for audits. They show the financial health of your business. What to do? Close your books monthly and prepare key financial reports. Review these reports with your accountant or finance team to ensure accuracy. Tip: look for inconsistencies between months or quarters that may need correcting before an audit begins. 8. Retain all business contracts and agreements. Why it matters. Auditors often request documentation related to financial commitments, vendor relationships, and loan terms. What to do? Store all signed contracts, lease agreements, vendor agreements, and employment contracts in a secure, organized location. These documents provide context for your financial decisions and liabilities. Tip: use digital document management tools like DocuSign or Google Drive to easily access signed agreements when needed. 9. Train your team on audit readiness. Why it matters. Audit readiness isn't just the responsibility of your accounting department. Everyone involved in finances, operations, or compliance plays a role. What to do? Train your staff to follow consistent procedures for submitting expenses, documenting sales, and maintaining records. Make sure team members know what's expected of them during an audit. Tip: develop a written audit preparation guide and assign roles to employees in case of a real audit situation. 10. Work with a trusted accountant or CPA. Why it matters. A professional accountant helps ensure your books are accurate, compliant, and audit-ready. Their expertise can catch mistakes before auditors do. What to do? Work with a certified accountant or CPA throughout the year, not just during tax season. Have them review your books, help with internal audits, and offer strategic advice. Tip: choose an accountant who understands your industry. Their experience with similar businesses will help prepare you for specific audit risks. Bonus tips for extra readiness. Use an audit trail feature. Ensure your accounting software has an audit trail feature that records every change made, by whom, and when. This is invaluable during an audit. Digitize your documents. Go paperless to avoid losing key records. Use cloud storage for easy access and backup. Stay up to date with laws. Regulations change. Subscribe to industry newsletters or consult legal professionals to stay informed about audit-relevant compliance rules. Common mistakes to avoid. Procrastinating until audit season. Failing to reconcile books regularly. Not understanding what auditors look for. Assuming software alone makes you audit-proof. Each of these mistakes can lead to longer audit times, penalties, or reputational damage. Being audit-ready is less about scrambling at the last minute and more about building a business culture rooted in transparency, accountability, and consistency. A well-prepared business can turn an audit from a dreaded event into a routine checkup. More importantly, maintaining audit readiness demonstrates professionalism and builds trust with investors, stakeholders, and regulators. By implementing the 10 strategies outlined above, you'll not only breeze through audits with confidence, you'll also set up your business for long-term financial health and operational excellence. Remember, audit readiness isn't a one-time task, it's an ongoing process. The sooner you start, the smoother your business operations will become.